Hello traders, Gary Wagner here. It is 12:14 in Honolulu, 6:14 in New York on Tuesday, 25th day of October, 2022, and this is the daily report for gold and silver. As I focused upon in today's opening letter, we have extreme escalation of geopolitical uncertainty with both North Korea as well as Russia and dollar weakness, which in a typical environment would have led gold to react strongly and have a solid and robust gain. However, gold is only trading up today by $3.30. Currently, we have the December contract of gold futures at $1,657.40. The dollar, though, was down by a full percentage point today, currently fixed at 110.77, and in fact, traders bid the precious yellow metal lower, and if not for dollar strength, we would have seen about a $13 per ounce decline in both futures and spot gold. However, silver did have a respectable gain today of about 0.6%, with the most active December silver contract trading up 12 cents at $19.31. This first chart is a daily chart of the dollar index in three-line break format. Of course, for those unfamiliar with this type of chart, it's the analogous point and figure chart that a Japanese trader would use. In other words, it does away with the element of time. And that's why when we look at it, there is such an extreme drop in price recently. It traded to a high of about 114 and is currently off about 4% from those highs at 110.77. I'm using this as our first chart to illustrate that even with extreme dollar weakness, we've not really seen gold move up a lot. And I also spoke about the fact that we have an escalation of geopolitical uncertainty with a rogue nation, North Korea, as well as an escalation of rhetoric by Putin as a possible false flag that Putin has used before to launch preemptive strikes that he says are in retaliation or to protect themselves from some possible narrative that he puts together. This next chart is a daily gold chart, also in three-line break format, and you can see according to this chart, it is certainly not bullish. And I also want to look at a gold chart in standard Japanese candlestick format, as well as a Henkin Ashi chart. I've just put up a daily Henkin Ashi, which of course uses the midpoint of the prior candle as the open of the current candle. Typically, when we see a market in decline and wait for a key reversal, you will see the candle size decline. You will get a pivotal candle, which is this one right here. It's gone from red to green, a very, very small body with large tails, both upper and lower. As the trend develops, you can see that there's in the absence of the lower wick, which is what you want to see on a bullish rally, as well as the fact that candle size grows until the trend begins to end. You get a small candle here and then your pivot candle here. In the same way, we did get a pivot candle at the bottom when we hit a double bottom at 1622. But if you take a look at the recent candles, they are certainly not expressing a strong trend. If in fact we're going to see gold rally at all, this is not what we typically get at the beginning of a strong rally. And that's why I'm bringing it to your attention. Lastly, we are looking at a standard Japanese candlestick chart. And when we look at this chart, the one thing that's worth noting is this recent double bottom at 1622. And it could be developing into a double bottom. And what you look for in this chart pattern is a W. In other words, you get your first bottom, you get a move to a higher pricing. It fails to really have a strong rally, and it forms what is simply called a W, in that you have the double bottom created by this pattern. And so it could be forming that double bottom pattern, but we're not really seeing follow through. And as I said in our opening letter, as well as comments throughout the show today, the fact that we're seeing a tepid response to real serious geopolitical uncertainty tells us that market participants continue to focus more on the Federal Reserve and potential rate hikes than dollar weakness and the backdrop of geopolitical uncertainty. And it is for the reasons I have spoken about throughout the show that we have been reluctant to issue a buy signal and send out a trade alert. We haven't seen follow through after we hit this second occurrence of gold trading to the low of 1622 last week. For now, we remain neutral, and we will wait to see if this develops into a rally. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.